Even despite the Easter holidays, previous trading week was finished with an important release that raised hopes for a swift and steady economic recovery in the US. On Friday, the non-farm payroll report showed a significant increase in the number of new jobs in the non-farm sector. In March, 916,000 Americans got employed. Despite the fact that most of global exchanges were closed on Good Friday, the US dollar index that measures its value against the basket of 6 major currencies finished the trade higher, near the mark of 93 points for the third session in a row. And this is the highest level since November. Investors continue betting on the strong recovery of the US economy, thanks to further fiscal stimulus and coronavirus vaccination. On Thursday, US President Joe Biden announced a new stimulus package of $2.25 trillion, and this is the second large stimulus package after the one of $1.9 trillion approved earlier. This definitively means that the government is ready for new spending. Republicans may strongly oppose this plan, especially as it requires raising the corporate tax to 28%. A sell-off in government bonds also pushed the US dollar higher. The bullish trend was especially strong against the yen, the Swiss franc and the euro. The fundamental factors remain positive for the US dollar. It has strong upside potential since the US economy seems to be doing much better than the rest of the world. The euro versus the dollar pair closed last trading week at 1.1760 with potential for further decline. The pound-dollar pair also dropped to its lowest level of 1.3720, which is the lowest value seen in the past 7 weeks. Still, the pound advanced by 0.8% against the dollar in the first quarter of 2021, boosted by hopes for a recovery of the UK economy thanks to the rapid start of vaccination. Besides, the markets felt a relief early in the year after the non-deal Brexit was avoided. Bitcoin was relatively stable in the course of the previous trading week. Its volatility has notably decreased. Bitcoin bulls have closely approached the psychologically important level of $60,000 per token. Traders expect that the price will break above this level in the near future or during the next trading week. Oil managed to withstand the rally of the US dollar last week. Oil traders welcomed the news that the OPEC Plus members agreed to gradually cut crude output in May. At the same time, crude prices are still under pressure from extended restrictions in the EU, slow vaccination rollout, and a rise of new COVID-19 cases in India and Brazil. Gold also finished last week with gains, having jumped from the 3-week low of $1,677 to $1,730 per troy ounce. The precious metal was supported by a drop in the US Treasury yields, as well as by concerns over higher spending in case new stimulus package proposed by Joe Biden is adopted. You've watched the combined review of financial markets on Insta TV with me, Anna Kasatkina. Subscribe to our YouTube channel to keep track of all the latest events on financial markets. See you back soon.